This video, I show you how to earn $91 per hour by just watching videos, which is one of the easiest ways to make money online. How to do it? We're about to find out. This is how to earn money online by just watching videos. Also, only a small percentage of people that watch my videos are actually subscribed. So if you end up getting value out of this video, consider subscribing with notification on. It's free and you can always change your mind later. In that way, I will notify you whenever I have a new and fresh strategy to make money online, so you can be one of the first to use it. Thus, of course, make the most money. So the first step is to play the video. Second step is to watch it for at least 60 seconds. Step 3 is to cash out your earnings. It's as simple as that. Today I'm going to show you the single most effective website for making money online by just watching videos. This website is accessible from anywhere in the world, and it's completely free to use. Now, right before I explain you how you can do this, comment down below, I am from blank, aka your country. In that way, I will know exactly where you're from. So in the future, I can make sure that every single video I release is meant for you. So drop your country's name in the comments down below. And don't forget, I'll be giving special bonus tips that will allow you to earn double or even triple more money compared to other people. So make sure to stick around and keep watching all the way until the end. Now let's get back to the video. First and foremost, I would like you to go to this website, zoombucks.com. This website is completely free, secure and legitimate. As you can see, you can earn money by simply completing surveys, watching videos and TV shows, and doing offers. However, for the purpose of this video, we will concentrate on watching videos because it's something you already do every day, and it pays you the most amount of money for the least amount of effort. So go ahead and click on the watching TV option. Now, allow me to explain to you how this website works. Step 1. Create a free account on this site. Step 2. Select a channel that interests you. After that, start watching TV shows and videos. After watching those videos, points will be credited to your account. You may also keep an eye out for more earnings by switching between different channels. And finally, exchange your points for cash or gift cards. It's just that easy. So make sure you watch this video all the way through to properly understand how this website works. As previously mentioned, the first step is to create a free account on this website. To do so, go to the homepage and enter your email address, and create a password, and just click sign up now. You might also use your Facebook or Google account to sign up for an easier experience. Now, once you log into your Zoombucks account, you can check how much money you can make on this website. You can see that people have made anything from $200 to $500, and you could be the next. These individuals are all earning money on Zoombucks by watching videos, completing surveys or doing offers. The best part is there are a large number of videos available here, and all of those videos reset every day, which means that there is an endless opportunity for you to earn money here by just watching videos. To get started, click watch on the left-hand side. After that, you'll see these boxes with the words Hideout TV and Lootably on them. And if you hover your cursor over them, you'll see their offer details. Next, select Lootably by clicking the Start button. You'll then be taken to this page, where you can select the video category. You have the option of selecting from the categories of food, DIY or random videos. On the right-hand side, you can see how many points you can earn on the respective categories. If I select food, for example, I will be taken to this website. You'll need to sign up for a free account to proceed, as you can see right here. To do so, enter your email address, create a password, and just click sign up. After creating a Lootably account, you'll be brought to this page, where you can watch all of the videos in the food category. This website allows you to watch as many videos as you want. Now, if I click this one right here, for example, I'll be taken to another page, where I'll have to watch the video for at least 60 seconds, in order to earn money. To give you a bonus tip on how to maximize your income, you can watch as many videos as you like on different tabs at the same time. That way you'll be able to watch a lot of videos, while doing other things. Thus, you'll be able to earn the most amount of money in the least amount of time and effort. You can watch more videos by clicking all of these videos on the right-hand side. Another bonus tip I have is to lower the video quality by clicking the video settings. To save data, I'd like you to set it to the lowest video quality possible. As a result, you'll be able to watch as many 60-second videos as possible while earning as much money as possible as well. These bonus tips are quite effective, and you can use them right away to double, triple or even quadruple your earnings in a single day on this website. Now just before we go any further, if you guys are enjoying this video in which I've put a lot of time and energy to actually do, I would really appreciate it if you guys tap the like button and make sure you subscribe with notification on. And if we get 2,000 likes on this video, I'll drop a brand new video next week to show you guys exactly how to make even more money online doing basic stuff like this in the comfort of your home. Now let's get back to the video. Now that you know how to make money on zoombucks.com by just watching videos, I'd like to show you another way to make money with this site, and that is by filling out surveys. On the left-hand side of your Zoombucks dashboard, you should see surveys which you should click. By doing so, you will be presented with a list of companies that offers you simple surveys to complete. Each survey will pay you 85 cents, 60 cents, $10, $3, and $5 or much more as shown here. Simply click on the company that offers you the most amount of money. After then, follow the same steps as before. Simply create a free account with the company of your choice, and begin taking as many surveys as you like. Now if you want to make even more money, then you need to watch this video right here, for you to discover the laziest way to make money online for beginners, which is available worldwide.
Check, please. Welcome to Everything Money. In this video, we will talk about Facebook and the new metaverse. We'll talk about the financials of the company, where we think the stock price will be headed, some exciting new ventures involving this brand new platform. We'll go over it all. We'll use our software and the stock analyzer tool to show you what we should be paying for Facebook and Meta platforms moving forward. And we'll show you how to trade this company at the end of the video. If you're interested in trading stocks at a quicker pace, Mo will show us how. I give to you, Paul and Mo, two guys who own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll give us a mindset about investing in the metaverse. Here you go. Paul, welcome in.
All right, thanks, Seth. So guys, first off, follow us on Instagram, Everything Money Investing, and then don't forget to follow our personal accounts, Seth, Mo, and I, because we have some really good matching pajama photos from Christmas. Seth,
one person has those. So Paul, I got this explained to me. So there's basically three stages of the internet that's gone on in this world. And stage one was viewing. So the first few years we went on things and just read. Stage two, we started buying, selling, interacting. They're saying that the metaverse is the beginning of this stage three, where we're going to go in, we're going to buy land in the metaverse, we're going to transact, we're going to have group meetings, and so it's exciting. But I'm finding other articles as saying it's already sort of very, very iffy. You know, it's kind of it's a very speculative play, and I know you're not into this. So describe your thoughts on this new metaverse moving forward.
So I love it. Imagine this world of me, you, and Mo want to get together and just play cards at a table instead of getting in our cars and driving all the way across town. The other thing is, imagine a world in which the Midwest is suddenly really awesome because it's inexpensive to live here. And if you can interact with somebody face to face in California, why would you ever move to California and spend all that money on the real estate? Why would you not just stay near your family? Like, so we're gonna be able to sit there and at some point, we're able to sit there and feel each other around, like basically be able to like feel ourselves right in front of each other. And isn't that pretty much all we're doing now? This is all big one simulation anyhow. So all we're doing here is a simulation. So all we're doing is a simulation within a simulation.
I'm seeing articles like one is entitled "The Metaverse Land Rush is an Illusion. It's Overhyped." Wall Street. There's another article that said Wall Street's pumped about the metaverse, but critics say it's massively overhyped and will be a regulatory minefield. So I'm guessing, Paul, although your excitement, which I'm actually surprised you're excited about something like this, I mean the prospect of a new company, because typically you like to let things sort of equate out, but it seems like
we're talking about an idea versus a stock price. It's very different things here. I'm not talking about the companies that do it and their stock price. I'm talking about the actual idea of the metaverse. Just like the internet, I wasn't anti-internet 20 years ago. I wasn't anti-Amazon 10 years ago. I was very pro-Amazon. I'm not anti-Tesla. I'm anti the investment in Tesla. So at these valuations. So remember the complete differences between stock, company, and idea. And the metaverse idea, I just love.
I think too that, you know, following the metaverse, there will be companies involved that have to power this thing. So chip companies, NVIDIA and Qualcomm, 5G platforms, AT&T, Verizon. Yeah, they're all going to play a role moving forward. But regardless, Paul, let's get to our 8 pillars. We'll look at Meta, ticker symbol FB, and get after what we do is our initial stock screener to see what's going on with this company and the stock price. Go ahead, Paul.
All right, so here we are on the Everything Money software. We're going to the 8 pillars tool. We're going to type in Metaverse.
I think it's still FB, Paul.
FB. Oh yeah, well, it just still pop up. Oh, Meta Platforms. That's why. I'm sorry. The company's name is Meta Platforms. I apologize. All right, so, oh wow, the stock is back at the 343. Mo and I had sold some puts in the 270, 280. Mo, did you do 300 too?
I did 300, yeah.
I think I did 270 and 280. So it looks like, as of this very second, the options are going to expire if things stay this way in 3 weeks from now. But anything can happen, because look at how quickly this fell. This can fall pretty quickly. I mean, we have a 52-week low of 244 back here. That's only 1 year ago, guys. That's insane. All right. So Meta, almost $1 trillion company. It's $970 billion market cap. Pillar number 1, we want the 5-year PE under 22.5, 40.89. That's high. However, remember, if the company's able to grow revenue and profit very quickly, you should pay a higher multiple. So this is, in and of itself, does not say it's overpriced. All right. Pillar number 2, we want the 5-year return on invested capital greater than 9%. Go over here, it's 14.3%. That is awesome. Okay, so these guys do a great job of making a cash flow return on their invested capital, which is debt and equity. No dividend, which is not surprising for companies that are still growing and trying to reinvest back in themselves. 5-year free cash flow, almost $22 billion, and last year's free cash flow of $36 billion. That shows a lot of growth. But so far, we have 1 check and 1 X. So number 3, we go to the income statement. We want revenue growth over the last 5 years. Very first line, $35.8 billion to $109 billion.
Incredible.
So remember, they did enough free cash flow last year equivalent to their entire revenue in 2017. That's incredible. Pillar number 4, we want net income growth. So we scroll down our income statement, 15.23 to 40. So look at this big growth. We're talking about almost tripling profit in the last 5 years. So if we believe this growth will still continue, or even if it's a slower pace, but still a high enough pace, that would justify a higher PE. So don't get just stuck on the PE. You should get stuck on high PEs if the growth rate's low. And we're going to use our stock analyzer tool to really show us what the stock company should be worth today based on these assumptions. All right, pillar number 5, we want shares outstanding stay the same or decreasing because we don't want to be diluted as shareholders. So we go to the bottom of the income statement. 5 years ago, 2.9 billion, last year, 2.81. So check mark there. Not much buyback, but still some.
Nice.
Yep. Now, pillar number 6, debt. Guys, you need to look at the debt of a company the way you look at the debt personally. The more debt you have, the more risk you have of bad times when things go poorly. So what do? We go to the metrics, the main page of our software. We look at the 5-year average free cash flow, 21.5 billion. We multiply that by 5. That's 107.85 or $9 billion. So we want $108 billion. We want the long-term liabilities under that $108 billion. So we go to the balance sheet of our software. We scroll all the way to the bottom. Long-term liabilities.
18 billion. What are they doing?
They couldn't try to go bankrupt. Like literally, if they tried really hard and said, how do we go bankrupt with our current balance sheet? They literally could not. This is incredible. I mean, Seth, how often do we see this?
Yeah, 1/10 of their free cash. It's just incredible.
Yeah, I mean, it's not that low, but still, the bottom line is it's low. All right, pillar number 7 and 8 have to do with free cash flow. So we go to the cash flow statement. Remember, free cash flow is cash from operations less your capital expenditures. You can use that to do 5 things: pay dividends, buy back shares, pay down debt, buy companies, make acquisitions, and reinvest back in yourself. So this cash flow statement right here, we added this free cash flow line here to make the math easy for you. Cash from operations less your capital expenditures. 5 years ago, 15.74. Last year, 35.81. Check mark there. And our final metric is we take the 5-year average free cash flow, we multiply it by 20 as a starting point for a value for the company. So 21.55 times 20 is $430 billion. So we want the market cap under 430. It's 960. That's an X. Then we go to our 8 pillars tab here. It shows us. Seth,
Yes.
Mo, what do we see here?
Valuation issues. That's it.
That's it. So this is the kind of company, guys, and this will be part of our software soon. You can add it to a watch list and set a trigger. That way, when it gets to a certain price point, you'll be notified so you can pay attention to the stock. The stock is just, from the 500-foot view, expensive. But now what we're going to do is we're going to use our stock analyzer tool, which has been an unbelievable success on the software. Every investment is the present value of all future cash flows, and we don't know the future, so we have to make assumptions and hope that those things play out. And my job as a value investor is to make conservative assumptions. So, first thing I do is select my years of analysis. I think Meta will be around for a long time, so we're going to do 10 years analysis. Now, revenue growth. Now, Mo, we talk about revenue growth all the time here. Obviously, I'm going to try to guide you on where I want to go. I want to pick a low number, which is like, listen, they're not going to go below this number. And I want to pick a high number saying, you know what, if they do some things pretty well, they'll hit here and somewhere in the middle. So give me your all-day low number. You're like, okay, if things went poorly, I think they'd grow revenue at this percentage.
15%.
Okay. Highest one. What do you think if they crushed it, what they get to?
30 to 35%, somewhere in that range.
So I just want to make note, though.
But don't forget, I'm incorporating this metaverse, which is basically a new world coming into this. That's my definition of crushing.
In 10 years, their revenue would have grown up 20 times.
Well, if this is a brand new thing and it actually takes off like the internet did, it's possible.
Okay, I'll put it in there. I don't agree with Mo, but we'll go somewhere.
I'm saying this is like the best assumption ever, that this thing is what it is being projected to be, and this actually works.
Okay.
My high end is crazy.
But what's the world of Meta? What do they calculate to be worth in 10 years?
Oh, I don't know, but I mean, just based on we're looking I read 2 articles last week that somebody bought property in the metaverse for 2.5 and 3.5 million. I have to think that Facebook is going to be getting a cut of this. Real estate and Nike and Adidas stores are already talking about how they're going to go in there and sell things in the metaverse and stuff. They're going to get a piece of all of this. They've created this world.
You're right. Okay, so I'm going to do 15, 25, and 35. My personal would have been 15, 20, and 25, but we're going to go with the Mo number here.
I think that's yours is more realistic. Mine is if all the hype dorks get their way.
So I'm going to do 20% in the mid-range. Even though it's not in the middle, I'm still going to do 20%.
That's
all right, what about profit margin, Mo?
I think they'll probably stay around this 33%, 32%. So maybe 31, 32, 33 or something. I think it can go up.
How about 31, 34, 37? Because if you're right, I think the profit margin will increase as they use the metaverse, because it's not going to cost that much.
Good point.
All right, free cash flow margin. Let's do 30, 32, and 34. PE. Speak to me, bro.
I mean, 18, 20, 22.
And guys, we always do 12.5% return, because if you invest in an ETF, you'll get 9 or 10%. So in order to invest in individual stock and have margin of safety, do 12.5. So we hit the analyze button, and guys, the current stock price is 343. Wow. Look at this. If Mo is right, this stock currently is worth $2,400 a share, where you should pay for it today. Oh, we just got, okay, so go back here.
I mean, you're buying a whole new world, so
right now, on the low end, guys, this stock is a buy today. Now, based on the assumptions before that we did, we came up with like a number of 280 to 300, and that's the thing you're gonna see in our videos, guys. We're always doing different assumptions on different companies, on the same companies all the time, because the whole idea is you want it to be so obvious to you that this is a buy. Mm-hmm. And Facebook, to me, at this price, isn't an obvious buy, but it's probably a buy, is my comment, if I were to be a buyer of stock right now. Now, for me personally, I'd still rather, I'm gonna sell some puts on it and generate some income as I build a position, like I did with Alibaba, as opposed to just go full out and buy the stock right now. Seth, does that make sense?
Yeah, it seems like when I hear that, I think, well, let me think about this. I think I should go buy some. I'm not fully into the options game. It's probably something I'm hoping to learn this year in 2022 is get into options and be a little more patient for a buying price. But It seems like, Paul, I guess I'm surprised because it seems like there's a lot of what ifs, or is this already inevitable? Some of the articles I'm reading is like, there are no what ifs. The metaverse is already here. But
but remember, we had the same thing occur with the internet 20 years ago. Like, hey, the internet's here. It doesn't mean you can't overpay for that. Mo, what are you going to say?
No, it is what ifs. I mean, back 20 years ago when the internet was coming on, it was still what ifs. It's not like, yes, the what ifs turned into truth. I'm not saying that the metaverse, to have two things within a 20-year period turn out to be these massive of things and the what ifs all turn out is not very likely. Wouldn't you agree with that, Paula?
Yeah, I would. So let's even do that. Let's do revenue growth. Let's say 10, 15. Let's do 10, 15, and 20% revenue growth and see how much it changed our numbers. There's our 280 number to 300.
There you go.
And I think that's what I was doing with the low end of the range there, probably in a previous video. So, but here's the goal, guys. Here's the good news. If you think they're going to grow 15 or 20% revenue growth in the next 10 years, and all these things play out, you got to buy this stock all day.
Yeah.
All day. If all these things play out, you have ample margin. You got a great return on your investment. All right, and so this is why the stock analyzer tool is so great, because you can put your assumptions in, play around with them, be conservative and be aggressive, and that way you can see a range of what you think the stock is worth on your own. You don't have to sit there and wait for our videos.
If you're looking to get the software behind Paul, he'll show you right now how you can grab it. You can have it in minutes and start making better investing decisions. Go ahead, Paul.
So guys, we made this software because we got so many requests from our subscribers saying, hey, how do I analyze my own stocks without having to wait for you guys? So we said, okay, let's just invest hundreds of thousands of dollars and do this. So we created our software. It includes everything you saw already. It's all in a mobile app. So it's already ready for your mobile phone, fully ready to go. You've got all the 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive daily content. 1 to 3 videos per day from Seth, Mo, and I, only for the subscribers of our software. Plus, you get everything here that's coming soon. This is all coming soon. Get it all here, available for you. But most importantly, the biggest thing you get is we have a community of over 6,000 people who use our software every single day. You can talk to them about all your investment ideas, because a lot of our users felt alone thinking about investments a certain way, and that's why they gravitated to our channel. But now it allows them to go talk about any investment ideas, including crypto, with people in the community, bounce ideas off each other, make all the decisions you want, and this is all for only $1 per day. $1 per day gets you all of this. If you can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it will lead to hundreds of thousands, if not actually millions of dollars in extra net worth for you for only $1 per day. So 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com is we aren't big enough yet to charge a sales tax, so you'll save on the sales tax for quite a while. So again, guys, $1 per day, sign up, everythingmoney.com.
If you're looking to trade meta platforms at a quicker pace, our fearless leader, Mo, will show us how to use the charts. Mo, take it away with those charts, baby, how to trade.
So it looks like the other day, I didn't even notice this, they had a little bit of a gap up there. So this will more likely than not come down. We're running right into our 100-day moving average. I could certainly see this thing. Let's look back. Let's zoom out here on a swing trading chart just a little bit and blow this up. Hold on 1 second. There we go. So the last couple times that it has challenged this 100-day moving average, this blue line, it's failed. It failed here. So it's coming back into that again. And the fact that we're challenging it again with this type of decelerating volume over the past week or so, which is not surprising. We're recording this right after Christmas. So it's probably going to bounce off this 100 and fall back down. So what I would tell you to do is look over here, wait for this stochastic to turn down on you, and go ahead and swing trade this and try to make some money going back to the 200 days from a short. From a long-term perspective, your stochastic is getting rather high, and if we just look here, we're just consolidating for the past, since basically the fall began. We're just consolidating between 345 and 325. So I think you're going to stay in this range and just keep bouncing up and down until something happens and the market gives one direction or another. Let's go and look from a 15-minute chart perspective. Facebook's always a good chart stock to trade from a 15-minute perspective because it gets that daily movement. Today, right now, if you are looking at this in real time, you can be going long on this when you get an engulfing candlestick. So right now, if we were to get a candlestick like that, taking out the previous candle, you can take a long position here and make some money in the short term on a 15-minute chart day trading basis. So if you guys want to learn more about day trading, Paul and I are going to be starting this day trading together and broadcasting it to the BidNast Nation. So if you want to join the BidNast Nation, come and join me. You get the Trading 101 series, which is all of the rules that you need to be successful from any rule perspective that I just showed you, long-term, short-term, or day trading. You get the Employed Trader series, which is 6 stocks that I go through on a daily basis and update you and take out the legwork for you. You get my exclusive monthly seminars, which I do 1 Saturday per month. It's an open Q&A just to the BidNast Nation. You get the chat community of 950 plus people that all have the same goals as you. Come and join us.
We will certainly keep you updated as the metaverse expands and that Facebook stock price. Paul, I'm interested. Obviously, when we say no to a lot of companies over the years, I'm always interested when you like one. So let's look a little deeper, and of course, we'll keep you guys updated as viewers. Thanks for watching. Get the software, you'll love it. See you next video.
Hello investors and welcome back to another video. Today we're going to do something different. Everything Money, the YouTube channel with more than 100,000 subscribers, recently made a video on Intel. And of course, as expected, they got a lot of views. Now, I've been covering Intel for 5 or 6 months already. You can see my previous videos over here. So I was genuinely curious, what do they have to say here? So let's make a reaction video and I'll share my thoughts.
Intel's a big one for us. We've talked about Intel a lot in the past. Yeah. I'm a buyer of Intel. I like it. I think it's grossly undervalued.
Right off the bat, this is a very good start. I like it when YouTubers are transparent. That's why when I cover stocks like KLA, ASML, Microsoft, the first thing I mention before explaining anything is, look, just in the spirit of full disclosure, this is my biggest holding. Now, I like to take this one step further. I also show you the amount I have invested. I don't think anyone else is going to do that. But this is very, very good.
Pillar number 1, we want the 5-year PE to be less than 22.5. 11.3, half the amount.
Very nice.
Check mark there.
Okay, so if you're not familiar with the channel, basically they have several pillars and that's how they analyze companies. But here's the tricky part, because they always mention they're not analyzing companies, they're screening companies, because at the end of the day, these are filters. That makes total sense. But in the title, it says stock analysis. So what is it? Stock analysis, screening, I'm always confused here.
Houston, we have a problem.
So let's start with the first filter, that's PE ratio less than 22.5. That's last 5 years PE ratio. Now, have you ever noticed I've been making videos for 5 or 6 months already? This is my full-time job. I manage money for people. I never talk about the PE ratio. So why is that? That's mainly because I'm focusing on the business model. I want to see if the company can grow for 15 or 20 years. Because if that happens, even if I overpay by let's say 20 or 30%, I'll still end up with a decent result. Here's what will happen. I'll overpay for the first year, I'll overpay for the second year, maybe even for the third year. But remember, the business is going to grow for 10, 15, 20 years. So I still have 17 years of decent returns. Remember, these companies are growing by 10 or 15%. That's the important part. Focus on the business first and then on the numbers. And you can see this practically with many investors. Investors who are focusing on good quality products, they always talk about AMD and Nvidia. But at the same time, investors who are focusing on free cash flows, cheap PE ratio, they'll always talk about Intel. Now, am I saying Intel is a bad company? Absolutely not. But Intel gets a low valuation because of one simple reason, and I'll explain that just in a minute. But as I mentioned the PE ratio, I can assure you one simple thing. Even when a quality company is cheap, many people still won't buy it. Because if the stock is down by 20 or 30%, why should you buy it? I'm sure something's wrong with this company. Let's take last year. Last year, Microsoft had a PE ratio of 23. Remember, this is not 5-year PE ratio. This 1 year, Microsoft had a PE ratio of 23. How many people were buying? Be honest here. You can see my portfolio. Microsoft is my biggest holding. I keep adding more and more. For my initial position, it has already doubled. As a matter of fact, let's take Facebook. 3 years ago, it had a PE ratio of 18 when we had the Cambridge Analytica issue. At that time, it was 50% of my portfolio. I recently reduced my position. How many people were buying at that time? Not many.
We want the 5-year return on invested capital to be greater than 9%. It is 12%. Check. This means that they do a good job of investing the capital that is in the business through debt and equity.
Yeah, that sounds perfect. I don't have to add anything here.
Pillar number 3 is revenue growth over the past 5 years, Paul.
62 billion, 78.5. Check mark there. Barely any growth over the last year.
Okay, so I'll pause here for a second because they didn't mention a very important point. Of course, you want revenue growth because the economy is growing at 2 or 3%. The semiconductor industry is growing at 5 or 6%. So you want Intel to grow at a decent pace. If not, that means they're actually losing market share, and that's not a healthy sign. That being said, you also want healthy margins. In their case, they're checking profit margins. That doesn't help you. That doesn't tell you anything about the core business. So check either gross margins or operating margins. Why? Because if their margins are decreasing, that means the pricing pressure is there and they're not able to maintain that price. So let's see what's happening with Intel and if they have some pricing power. Check the gross margins. In 2015, they had gross margins of 62%. In 2020, they had gross margins of 56%. That means that there's some pricing pressure, and that's mainly from AMD because they're also gaining some market share. So Intel is actually going for cheaper products, some categories, and that's why their margins are decreasing. And here's the interesting part. Their margins are going to decrease even more. They'll reach 50-52%. How do I know this? Because the company mentioned it. So in the next 4 or 5 years, you'll see their margins are going to decrease even more. Now, is that a bad thing? Well, ideally you want healthy margins and sustainable margins. But in this case, you already know the margins are going to decrease. But let's just say it's not bad in this case because they're betting everything on the foundry project. The foundry business, that's where you make chips for other players, already comes with lower margins. Also keep in mind it has a very high gestation period. So you can invest for 2 or 3 years, but you won't see high return from that. But eventually, once it's a very profitable business, the margins can increase. And this is the biggest problem with past figures. As I'll explain in a minute, Intel's future is going to be very different. Free cash flows are going to be significantly lower. So value investors who actually like free cash flows, in the case of Intel, it's not going to help you. Dividends are going to be different and buybacks are also going to be different. So if you're checking past figures and that's how you make your projections, well, you're going to have many problems because as I mentioned, it's going to be totally different. But if you're liking this video and you like to support my channel, please don't forget to click the like button down below. It really helps me out. And feel free to subscribe for similar videos.
Pillar number 4 was profit growth. $13.85 to $21.1 billion. Check, massive check mark.
A fun fact here, in the case of semiconductors, the biggest cost is actually research. Nvidia, for example, they spend more than 20% of the revenue on research. That's why the company is so successful. So Intel is growing, revenue is growing, so the research cost should also be growing, technically. Let's see what's happening. This is the last 5 years, the research cost. You can see that actually they're not spending more. Now, is this a good thing or bad thing? I'll let you decide. But this is one of the reasons why the profit margins are so healthy, because Intel is growing but they're not spending more on research. Personally, I don't like this. So for example, I have companies like KLA, ASML, every year they're spending more on research, and I actually like that because with that research you'll come up with new products or you'll defend your market share. In case of Intel, that's not really happening.
Pillar number 5, Uncle Seth. This is the big one. So on Intel, 5 years ago, 4.69 billion shares outstanding, now 4.06. They are decreasing the shares outstanding, and I love that with such a cheap stock price.
Okay, this makes sense. Shares outstanding is decreasing. It's good because your ownership keeps increasing without doing anything. That being said, it's different with every company. Let's take AMD. AMD was struggling 4 years ago. I take AMD because they covered AMD recently, and they mentioned it's bad because shares outstanding are increasing. It's not necessarily bad. AMD was struggling 3 or 4 years ago. They didn't have money. So how do you fund research? How do you give incentives to your employees so they continue with you? Remember, the company is struggling. Nobody wants to continue with you. So you have to give incentives. How do you do that? At the end of the day, there will be dilution. But now look what's happening. AMD has free cash flows and now we'll also have buybacks. So that's perfect. Every situation is different. If AMD can take the cash they get and fund research and actually come up with great products, because remember, they were actually coming up with the Zen architecture, which they're using even right now. Now we can see the full potential. How is that bad? It's not bad.
Pillar number 6 is our debt. So we go to our 5-year average free cash flow, $15.7 billion. We multiply by 5, that's $78 billion. What we want to do here is we want to go see their long-term liabilities are under $78 billion. Long-term liabilities, $48.3. Check.
I don't have any formulas for that, but I guess this makes sense. At the end of the day, I'll oversimplify it for you. It's all about returns. If a company takes debt and they actually invest in any project and they can actually generate returns of 20 or 25%, why does the level of debt matter? Actually, it's a good thing the company can take leverage, invest in the business and generate 20-25%. That means the business is going to grow even faster. Remember, your free cash flows are always going to be limited. If you can take debt, accelerate everything and grow even faster, maybe that's a good thing.
Pillars 7 and 8 are all based on cash flow. Cash flow is the most important part of a business for me. So guys, free cash flow is cash from operations less our capital expenditures. $11.78 billion to $17.33 billion. That's a check mark. Their free cash flow is going to drop very strong soon, but for good reasons. They're going to invest back in the business.
Okay, so in this case, you saw Intel's free cash flows last 5 or 6 years. Irrelevant. It doesn't really help you. As a matter of fact, I'd say it makes it even worse. Now, the good thing is Paul mentioned their free cash flows are going to decrease. The problem is he didn't show you how much are they going to decrease. Let's take CapEx. That's investment in property, plant, and equipment. This is Intel's CapEx last 5 years. Now, take a look at the 6th year, and remember, in the 7th, 8th year is going to increase even more. But check the 6th year. You can see the CapEx is increasing significantly. Now, you might be wondering why. Well, that's the foundry business. Remember I mentioned it's very capital intensive, you need very expensive machines, so that's where you see these numbers. You see it in the CapEx. Now, if Intel is going to spend so much on CapEx, which they will, and is going to increase even more, this means Intel's free cash flows are going to be significantly lower. And that's why I mentioned Intel's free cash flow of the last 5 years, it's not really helping you, it's irrelevant. Next 3 or 4 years, their free cash flows are going to be significantly lower.
Our final pillar, we take that 5-year average free cash flow of 15.7 and we multiply it by 20. This is a starting point for evaluation. Does this mean this is the hard set rule? No. A fast-growing company deserves a higher valuation than a low-growing company, but we have to start somewhere, so we start at 20. So 15.7 times 20 is $314 billion. The market cap is 205. That is a check mark all over.
Okay, so I'm going to skip this because I want to get to the next part, and that's the projections. That's the juicy part, because I want to see what do they expect from Intel in the next 10 years.
We use this because every investment is the present value of all future cash flow. In the last 1, 5, and 10 years, the revenue growth has been, and a lot of this is from acquisitions too. I want to put numbers in here not based on acquisitions, based on that they just grew themselves. So 0.24.
So they're basically telling you that in the next 10 years, they think Intel will either grow at 0%, 2%, or 4%. Okay, so 0 to 4, I think we can all agree that this is conservative because management's guidance for the next 4 or 5 years is 10 to 12% growth. That being said, if I recall correctly, one of their filters was actually revenue growth. So if they think Intel is going to grow at 0%, 2%, or even 4%, that's not passing their own filter because they want these companies to grow at a healthy rate.
Now, profit margin. Their profit margin increased over the last 10 years, but I think that with their fight with AMD might put some pressure on margins, but they're also growing some other aspects of their business at a higher margin, but they're small parts of the business right now. So give me a profit margin based on the last, give me 3 profit margin levels.
18, 2022.
Why so?
I agree with Seth. Why so low?
Now, Seth asked one very important question, and he asked, why are you assuming such low profit margins? Because now they have 26%, and you're assuming in the next 10 years they're going to have 22%. That's your best case scenario. So why are you assuming that? And he didn't get the right answer. I'll give it to you. First, we are already seeing pricing pressure. So as I mentioned, in the case of gross margins, they're decreasing consistently. That being said, their latest chips, Alder Lake, it's supposed to be very nice, and the metrics look nice. So let's see how that goes. Because if that goes well, of course that will help them with their margins. But there's a second component, and this is the most important one, and you just need a little bit of financial knowledge for this. As I mentioned, Intel is going to have a lot of CapEx, so they'll have a lot of property, plant, and equipment. That comes with a lot of depreciation. Depreciation in the income statement is an expense. If they'll have a lot of depreciation, profit margins are going to fall significantly. That's going to happen automatically. So when they assume profit margins of 22%, actually that's a good thing, because depreciation is also going to hurt them. Just the problem is they didn't mention that, so just for Seth, just so you know, that's one of the reasons why the profit margins aren't going to be so high.
The current PE on the company is 9.8, and the current price of free cash flow is 12. And I think that the valuations will increase over time, correct?
Basically, Paul is saying that right now Intel has a PE of 9, but in the next 10 years, it could either be at 11, 13, or 15. Now, the PE ratio is basically a guess game, but they never get a very high valuation, mainly because they never deliver. We were expecting great chips, but they never delivered. In the case of AMD, however, they always deliver, and of course, the revenue is growing. But in the case of revenue, this makes sense because it's not like the CPU market was growing by 20%. AMD just didn't have market share and they started gaining market share. That's why the company can grow, and that's why they get a high valuation. In the case of Intel, they just don't deliver. Hopefully with the new management, we see a new turnaround plan.
And for desired annual return, we always do 12.5%. Can you please explain to everybody why, Seth?
Yeah, I mean, if you want to put your money into standard ETF, VO, Vanguard, or SPY, you're going to get a little under 10%. And so if you want to put your money in just one company and have the risk of having this company go down and lose your money, you want a higher reward, which would be 12.5. So we want to get that bigger reward.
I think we've been conservative here. And the high number is $57. The middle is $42. That's why I'm a buyer of Intel anywhere sub 50.
Okay, so desired annual return of 12.5%, it does seem a bit high, but again, you can put the number you want. Overall, I think the video is fine, but it's not going to help you. As I mentioned in the case of Intel, the future is very different, capital intensive, lower margins, so everything is going to change. Past figures, it's irrelevant in this case. That being said, I have a very simple question. If your bet is on the foundry business, because in the case of Intel, they have mentioned they're betting literally everything, the company, on the foundry business, why not go with Taiwan Semiconductor? It has a PE of 26, but it has certain risks, the location, political risks. But in the case of Intel, again, it's cheap, but you also have the risk that it won't work out. Remember, in the last 5 or 6 years, Intel has been struggling. They didn't come up with good products. So there's also risk there. So the question is, which one should you go with? In my case, I'm not betting on these foundries because I already know it's capital intensive business. In the case of Intel, I don't even know if it's going to work out. I do know one thing for sure. Intel is going to invest billions. Taiwan Semiconductor is going to invest billions. So they will need more machines so they can make more chips. And that's where I'm betting, on machines, equipment manufacturers. If you'd like to learn more about that, you can simply click over here.
This video, I show you how to earn $91 per hour by just watching videos, which is one of the easiest ways to make money online. How to do it? We're about to find out. This is how to earn money online by just watching videos. Also, only a small percentage of people that watch my videos are actually subscribed. So if you end up getting value out of this video, consider subscribing with notification on. It's free and you can always change your mind later. In that way, I will notify you whenever I have a new and fresh strategy to make money online, so you can be one of the first to use it. Thus, of course, make the most money. So the first step is to play the video. Second step is to watch it for at least 60 seconds. Step 3 is to cash out your earnings. It's as simple as that. Today I'm going to show you the single most effective website for making money online by just watching videos. This website is accessible from anywhere in the world, and it's completely free to use. Now, right before I explain you how you can do this, comment down below, I am from blank, aka your country. In that way, I will know exactly where you're from. So in the future, I can make sure that every single video I release is meant for you. So drop your country's name in the comments down below. And don't forget, I'll be giving special bonus tips that will allow you to earn double or even triple more money compared to other people. So make sure to stick around and keep watching all the way until the end. Now let's get back to the video. First and foremost, I would like you to go to this website, zoombucks.com. This website is completely free, secure and legitimate. As you can see, you can earn money by simply completing surveys, watching videos and TV shows, and doing offers. However, for the purpose of this video, we will concentrate on watching videos because it's something you already do every day, and it pays you the most amount of money for the least amount of effort. So go ahead and click on the watching TV option. Now, allow me to explain to you how this website works. Step 1. Create a free account on this site. Step 2. Select a channel that interests you. After that, start watching TV shows and videos. After watching those videos, points will be credited to your account. You may also keep an eye out for more earnings by switching between different channels. And finally, exchange your points for cash or gift cards. It's just that easy. So make sure you watch this video all the way through to properly understand how this website works. As previously mentioned, the first step is to create a free account on this website. To do so, go to the homepage and enter your email address, and create a password, and just click sign up now. You might also use your Facebook or Google account to sign up for an easier experience. Now, once you log into your ZoomBucks account, you can check how much money you can make on this website. You can see that people have made anything from $200 to $500, and you could be the next. These individuals are all earning money on ZoomBucks by watching videos, completing surveys or doing offers. The best part is there are a large number of videos available here, and all of those videos reset every day, which means that there is an endless opportunity for you to earn money here by just watching videos. To get started, click watch on the left-hand side. After that, you'll see these boxes with the words Hideout TV and Lootably on them. And if you hover your cursor over them, you'll see their offer details. Next, select Lootably by clicking the Start button. You'll then be taken to this page, where you can select the video category. You have the option of selecting from the categories of food, DIY or random videos. On the right-hand side, you can see how many points you can earn on the respective categories. If I select food for example, I will be taken to this website. You'll need to sign up for a free account to proceed as you can see right here. To do so, enter your email address, create a password, and just click sign up. After creating a Lootably account, you'll be brought to this page, where you can watch all of the videos in the food category. This website allows you to watch as many videos as you want. Now, if I click this one right here for example, I'll be taken to another page, where I'll have to watch the video for at least 60 seconds, in order to earn money. To give you a bonus tip on how to maximize your income, you can watch as many videos as you like on different tabs at the same time. That way you'll be able to watch a lot of videos, while doing other things. Thus, you'll be able to earn the most amount of money in the least amount of time and effort. You can watch more videos, by clicking all of these videos on the right-hand side. Another bonus tip I have, is to lower the video quality, by clicking the video settings. To save data, I'd like you to set it to the lowest video quality possible. As a result, you'll be able to watch as many 60-second videos as possible while earning as much money as possible as well. These bonus tips are quite effective, and you can use them right away to double, triple or even quadruple your earnings in a single day on this website. Now just before we go any further, if you guys are enjoying this video in which I've put a lot of time and energy to actually do, I would really appreciate it if you guys tap the like button and make sure you subscribe with notification on. And if we get 2,000 likes on this video, I'll drop a brand new video next week to show you guys exactly how to make even more money online doing basic stuff like this in the comfort of your home. Now let's get back to the video. Now that you know how to make money on zoombucks.com by just watching videos, I'd like to show you another way to make money with this site, and that is by filling out surveys. On the left-hand side of your Zoombucks dashboard, you should see surveys which you should click. By doing so, you will be presented with a list of companies that offers you simple surveys to complete. Each survey will pay you 85 cents, 60 cents, $10, $3, and $5 or much more as shown here. Simply click on the company that offers you the most amount of money. After then, follow the same steps as before. Simply create a free account with the company of your choice, and begin taking as many surveys as you like. Now if you want to make even more money, then you need to watch this video right here, for you to discover the laziest way to make money online for beginners, which is available worldwide.
Step number 1, come over to this brand new website and use the major swing level strategy, the order block strategy, and relative strength index, and you will be able to turn $20 into $200 per day forever. Now before we get started, I want you to comment down below what you think we are talking about in today's video. Is it affiliate marketing? Is it dropshipping? Is it drop servicing? Is it creating content on Instagram or YouTube? Is it trading? Comment down below what you think today's video is about, and let's see how many people can get it right. But without further ado, let's continue. So today's video, now that you've commented, is about Forex trading. Now before you click off, now that you've seen trading, you have to put money in, you might lose it, etc. In this video, I'm going to show you how you can become a 99% successful trader. The reason I say 99% is because nothing is guaranteed with trading, but using this exact strategy, I've been able to turn $20 into $200 a day, and I've only had one loss out of my last 16 trades using this strategy. In today's video, I'm going to show you exactly how to do this and go from noob to a completely pro trader in just 20 minutes. And the first step is to leave a like down below on this video. I would really appreciate it if you could leave a like down below and comment down below what content you would like to see more on my channel. I love it when you guys leave positivity on my channel. It really pumps me up to release more epic content like this for you guys on the daily, and make sure you subscribe down below with the red notification bell so that I can send you a message every time I upload an epic video just like this one. But without further ado, now it's all gone, let's get straight into this. So the first website you're going to come over here is called tickmill.com. So this website is basically a broker for trading, and the reason we're going to be using them is because they give a zero spread. They don't take any commissions. Now basically what a broker is, it's a man in the middle where you deposit money to trade with and you withdraw all your profits from there while trading on the live market. A broker is required for trading. Now I don't make any commissions about talking Trickmill, or if I sign any people up, I make zero commissions. I use them myself. They're honestly the best broker I've used, so I recommend you can use them too. You can come straight over to the website. You need to click on or scroll down on the page over here where it says pro account, here where the spread says from 0.0 pips, meaning there's zero spread. click on create account over here, and you'll be able to sign up completely for free, and you will get login details once you verify your account that you can log in with the live trading app, which I'm going to show you how to do now. Step number 2 is to come over to this website called tradingview.com. Now this is a website where we can go and analyze graphs. Now what I'm going to do is on this app, which is an app where we can actually go and analyze markets and predict trends, I'm going to show you the 3 strategies of major swing level, relative strength index, all combined into one to literally guarantee your trade. What you're going to do is you can create a free account on this website, no charges. Click on charts on the top left over here, and on the chart page you'll be prompted with any sort of chart. So this specific chart is the New Zealand dollar versus US dollar pair. If you want to trade your currency, you just click on the NZD USD logo up top here, and you can go and choose between forex, stock, futures, CFDs, cryptos, etc. In this specific case, we are only going to be using forex, as I find this works best with forex. So I'm going to use the example of New Zealand dollar, United States dollar, and we're going to start off with the first strategy called major swing level. Now it's super important that you watch this if you want to turn $20 into $200 every single day. So what I'm going to do is I'm going to show you over here with the brush. I'm going to click on the brush tool. I'm going to zoom in on this. I'm going to zoom out on this chart on the 15-minute chart. So you want to set your chart to 15 minutes. You firstly want to identify the trend of this graph. Is it, if you zoom out, is it more going upwards or is it more going downwards? Here you can see this graph is getting more of an upward trend. So what you want to do is, if it's doing an upward trend, you want to draw a line at the lowest point, like that. Next, you want to draw in a line straight up to the highest point before the graph turns around and goes back down. So then what you're going to do is, from this top point, you're going to draw another line back down and draw a line. Another line straight back up to the highest point, and another line back down to the lowest point before it goes up. Another line to the top, another line back to the lowest point. Another line to the top, another line back to the lowest point. To the top, back to the lowest point, to the top, to the lowest point, to the top, to the lowest point, to the top, to the lowest point, and do this all the way through the graph. Now if you have a look here, this is going to go back down again according to major swing level, and back up, back down a bit, and back up. So this is how you can use major swing levels. So over here, all these points where the graph swings around towards the other direction, that is what you call a major swing level, and you can use this strategy over the last couple of days on the graph to identify the trend of this graph and base your trades on that. Now what we're going to do is, let me just quickly go and clear this graph. Okay, that is step number 1. So over here you can see right now, let me just click all the way back here and clear all of this. The next predicted trend of this graph over here might come down a little bit more, and we'll go straight back up like that. But now we're going to go and confirm that with the order block strategy. So I'm just going to quickly clear this again. Now this is how this works. So if I click on my graph, let me show you a perfect example of an order block strategy. How an order block strategy works is, what you do is, let's take a look at this. Let me just quickly get my brush. This candle over here, you can see where my pen is. Now as you can see, before this candle was a green candle that was going towards an upward trend. A green candle means the market's going up or is in a bullish trend. So how you look at a order block is, if you take this downward block, if you take this downward candle over here, and if this red candle is bigger than the previous green candle, and as soon as the next candle is also a red candle, provided that this previous red candle is bigger than the previous green candle. So over here you can see it was green, turned to red, came back down. Over here where this next candle started to turn red, you would place yourself, because every time you look at this, the graph is nearly guaranteed to go down. Take a look at this over here as well. This red candle was bigger than the previous green one. As soon as the second red one became red, it's a sell. Market went down, you could have caught a couple of pips. Same here, market went down, a couple of pips. Same over here. This red candle is bigger than this previous green candle. Okay, the next one was kind of green, but the next one was red over that. After that, you could have caught a couple of pips. So this is how you identify how you can predict the market and place your trades based on the order block strategy. But now if I look at this on top of major swing level, highest point, low point, high point, low point, major swing level also proves that this is going down and should have been a sell. And thirdly, we can go and look at the relative strength index. So the relative strength index is an indicator. So on your trading app or trading view, if you click on indicators over here, it will pop up with a tab. You can just type in RSI. It will be the relative strength index over here. Now, this is the relative strength index over here. You can see the RSI, which is basically a second separate graph. Now, if you look at the RSI on the right over here, you've got 2 points. It ends at 30 and ends at 70. Now, every time this bar graph is towards or closer to 70, the odds of this market coming back down is quite high. It's not a guarantee, hence why it's called an indicator. As you can see, this line over here was above 70. The odds of it coming down was good, which it came down over here, which is good, which means there's an indicator that you should put a sell. Now, if you use this RSI graph, if you use the order block strategy and the major swing level, you can literally predict any trade that you want. So let's go and put this into action. I'm going to log onto my iPad, use these 3 strategies, and trade live in front of you and make profits. So over here, you can now see I'm on my iPad on the MetaTrader app. Firstly, step number 1 is to come over to the Apple App Store and you want to go and search MetaTrader, and you want to go and install over here MetaTrader 5 and log in with the same details that Tickmill sent you, the broker that I showed you in the beginning of this video. And the next step is it will take you to a graph that looks like this. Now, if you go and click on quotes over here, and you click on enter symbol, and you click on Forex, you can go and view all the Forex pairs that you can go and trade. Now, I've already added the ones that I usually trade. So if you click on the chart button over here, and you click on the drop down over here on Great British Pound New Zealand Dollar, we can go and choose the currency pair that we want to go and trade. Let's use the example of United States dollar versus the Canadian dollar. I firstly want to show you an example of a major swing level and a order block where you should have sold. So take a look at this. Up top here on the left, here we go. This red candle over here was bigger than the previous green candle. The second candle also became red. So as soon as the second candle hits red, you know the market's going to go down. So you would place a sell over here. Take a look at all these pips you could have caught. You would close your trade over here. Same thing over here. This red candle was bigger than the previous green candle. Second candle became red. You place your sell over here. All of these pips are pure profits. And you can also do the reverse. So for example, let's take this buy over here. This green candle over here was bigger than this previous red candle. As soon as the second candle also hit green, you would place your buy over here. And here is a couple of pips that you could have caught. So it can work for buys and sells. Now let's go and put this into action. So take a look at this. Take a look at this green candle over here. This green candle is bigger than the previous red candle. Now, if the next candle also becomes green, then you know to place a buy. So let's keep watching this market and see if it does so, and let's see if we can make some profits using this strategy. Also, if I zoom out over here, according to major swing level, high point, low point, high point, low point, high point over here, low point down here, high point, low point, high point, low point, high point, low point. So this is in the middle of a low and a high point, so the odds of it going up is still very good. So therefore the major swing level also backs this up. So over here, if we have a look on Trading Viewer over here, you will see that there's 3 minutes left on the USD Canadian chart till the next candle forms. So let's give it 2 minutes 50 now and see what that next candle does. Over here you can see the second candle is now started and is hitting green. So what I'm going to do is I'm going to place 2 buys. And there you go, you can see this graph is continuing to spike up and I'm already at $32 profit on this trade, thanks to major swing level, order blocks, and as well as the RSI helping me out here by telling me that this market has not yet hit its peak. But let's set the goal of $50 to $100 with this trade. As soon as I hit between $50 and $100, I'm going to close this trade and take profits. Here you can see we're all the way up now on $41 profits, literally in the last 2 minutes. As you can see over here, I've now hit $50, $60 profit now. So what I'm going to do is I'm going to quickly close these trades and actually take profit as I'm happy with this. And there we go. For now, that is now a total of just over $50 profit made so far. Let's continue this and try this one more time on a different market. And what you've got to basically do is just go through all the markets and have a look at where you see potential buys and sells using the major swing level, the order blocks, and also take notes of the RSI. So let's just go through some of these and have a look at what we can go and trade. Let's go and try NZD, New Zealand dollar, Canadian dollar over here. And there's no real order block that's formed over here, but here you can see there was a perfect order block over here. Green candle was bigger than the previous red one. Second one hit green, immediate massive buy. So this was also another good example. All right, have a look here. Great British Pound, Japanese yen. This green candle, red one was bigger, second one's red. Let's hit a couple of cells. I'm going to place 2 cells. Let's track this progress. Over here you can see this is currently negative because this is the spread and the commission that the broker company takes. And there we go. Take a look at that. We are now at $60 profit on this trade as well. And you can see the market's starting to drop in here. I've actually put a notification on TradingView as well. So usually what I do is when I trade, I have a look on TradingView at the same time as well as watch the market on my live tablet. So what I'm going to do is I'm going to close these trades and take $60 profit here as well. Let's expect this to close. So now so far we are at $120 profit, basically on a $15 investment so far. So as you can see over here, I don't really trade long term. I trade short trades based on perfect analysis, but with high execution to make high profit, but it's also a little bit higher risk. But as you saw, I've just made $130 literally in the last 5-10 minutes trading with this strategy over here. Major swing levels, order block strategies, and relative strength index. If you want any help with this, just send me a DM on Instagram. I'll reply to your DMs. I'll leave a link in the description to my Instagram. And if you want to get more trading videos like this, make sure to comment down below and I'll definitely create more videos like this. But as you can see, I hope you're happy with this video. I'm definitely happy with making $130 live in this video trading with this strategy. So I definitely suggest go and try this yourself. The broker that I'm using is really fantastic. It's my Tickmill live account. You can go to tickmill.com, and I want you to be ready for tomorrow's video because I'm going to have one epic video. But what I'll do is I'll leave my other trading video over here where I go more into depth on major swing levels. Today was more about major swing level, order block strategy, and relative strength index. This is a specific video just on major swing level. I also traded live and made live profits over here. So I recommend if you want to go and learn more about trading and perfect your trades, go and click on this video over here. It will really help you. It's about a 27 video or in-depth video course that will help you out. So make sure to go and click on this video over here and I'll see you over there.
Hey, welcome back to Everything Money. In this video, you will learn about Intel, the amazing company. We'll show you the financials and what you should be paying for this using our stock analyzer and our amazing Everything Money software. Paul owns this company, so we'll go over why he loves it and what he likes about its future. If you want to trade Intel at a quicker pace, we'll show all the charts and trends with Mo, and he'll show you how money can be made on Intel swings. I bring these questions about Intel, your questions you might have, to a couple guys that own and operate over $100 million in multiple businesses that are running awesome, real estate that's running flawlessly, and stock. So let's talk about Intel and where we're going from here. All right, welcome in, Paul and Mo. Welcome, boys.
Tell us.
All right, guys, first off, follow us on Instagram, Everything Money Investing. It's our new absolutely blowing up Instagram account, and then
It's
also
true.
follow us personally because we got rejected for the blue check marks, and after I got out of the hospital for my suicide attempt, then
Yes.
we came
Oh,
back.
Paul. You own. Speaking of, well, I am not even going to go there, Paul. But you own Intel, and it's been down of late. So, are you also contemplating life decisions based on this stock? What do you think?
No. So here's what I want to show before I get into that. I've been a big proponent of Intel. I own Intel in full disclosure. Do not copy me. We're trying to teach a process on this channel, but I will disclose ownership when I have it. But look at this stock over the last 20 years, guys. This company in 2000 was $80-some a share. They had 6.5 billion shares outstanding, and they did $28 billion in revenue and $7 billion in profit. If I told you back then in 2000 that the company would go from 28 billion to 78 billion in revenue, from 7 billion in profit to 21 billion in profit, and from 6.5 billion shares down to 4 billion shares in the next 20 years, where would you have told me the stock price would have gone?
Way up, right, Paul?
Way up. And look at it now. So why is that? Overvaluation. When you overpay for a good thing, you're still overpaying.
Paul, I'd love to go back and, I don't mean to cut you off, but I was just thinking, I'd love to go back to their conference calls from these days and let them tell us what their huge plans were and where their stock was going to go. Well, do they talk about stock price in these, Paul? What do you think? I can't remember.
I get apprehensive whenever an executive team focuses on stock price. That's not their job. The job, it's always funny to me, and this is probably a video we need to do separately. The goal of a management team is to not worry about the stock price. Their job is to build revenue, profit, and a good fundamentally based business financially. The stock will go where it's supposed to go over a long period of time. But in the US, we're so focused on quarter results and everything that now all of a sudden we reward CEOs because the stock price goes up. We shouldn't reward CEOs when stock prices go up. Just like we shouldn't fire a CEO because the stock price goes down. CEOs and management teams should be commended for revenue and profit and better balance sheets. That's what they should be rewarded for, not for a stock price. That's just the market's interpretation of all these things that are happening. And during booming times like now, those interpretations tend to be very, very wrong. And when things are bad, those interpretations tend to be very, very wrong. So that's like in our company, like at Crossroads, I tell everybody, your job is revenue growth. My job is to worry about the bottom line. If there's ever an issue where you're spending too much where the bottom line isn't going to happen, I'll let you know. But our job is to keep a good balance sheet, which my brother and I handle, and then from there, have our partners and management team drive revenue. That's it.
Yeah, Paul, you really opened my eyes when you started talking about companies and owning stocks as if I'm owning a company. And all this changed when I started owning my own businesses. So if you're out there and you're not a business owner, I guess it's a language, Paul, you have to learn about, the ownership of business, how you want it to grow. So if you're new to the channel, we go through an 8-pillar process to screen for stocks and analyze them. We'll get into pillar number 1. Go ahead, Paul, show us the screen here.
All right, guys, pillar number 1 and our Everything Money exclusive software here that you can get, and I'll explain it later. We want, first off, it's a $200 billion company, but pillar number 1 is we want the 5-year PE under 22.5. It's 11. That's a check mark. Pillar number 2, we want the 5-year return on invested capital being greater than 9%. It's 12%. Check mark. Now, this dividend yield of 2.7% is pretty solid, over double the current market. And remember, guys, dividends are not always safe. You have to compare the dividends paid to free cash flow. I don't even look at the earnings. I don't even look at net income. I look at free cash flow. They paid out $5.58 billion in dividends, and 2 lines above in our exclusive software, it shows you the 5-year average free cash flow of 15.7 and last year's free cash flow of 17.3. So easily able to cover. Now I will say this, Seth. We're talking about it in round 1 of this video about dividends. People love getting dividends. Dividends are very tax inefficient. Dividends are paid out after tax. This $15.7 billion is after the company already paid its corporate tax. Then it pays it out to you in a dividend, and you got to pay 20 to 40%, depending what state you're in, 25 to 40% extra on top of that. So when people say, oh, the dividend tax is so low, no, it's not. It's already doubly, it's the second tax on that money. What I'd rather see them do is, this company is selling so cheap, do me a favor, buy back shares. There's no tax on buying back shares, but you're giving me more ownership of the company and you're increasing my earnings per share and my revenue per share and my balance sheet per share, my assets per share and everything like that. So give that to me that way. Don't pay me a dividend. Give me more of the company.
Paul, do you think for a vastly probably uneducated or in terms of stocks, an uneducated investing population, it just sounds better to issue a dividend than buying back shares, right? It's kind of hidden in the balance sheet. What do you think?
Yep. Yes, but with our channel, we're trying to appeal to the small subset of people who want to understand investing and understand businesses, and not just hope for the hype train to take over, and then they make a lot of money because their stock price goes up. So that's the difference with our channel. We're not trying to be this channel where it's like, oh, this thing's going to go to the moon. No, we're trying to sit there and say, listen, the smart financial decision is buy back shares with a company this cheap, with this much cash flow. So,
pillar number 3.
We're going to go to the income statement of our exclusive software. We want to see revenue growth over the last 5 years. 62 billion, 78.5 billion. Pillar number 4, we want net income increasing. Scroll down a little bit. 13.85 and 21.1. Pillar number 5, we want shares outstanding decreasing. That's what I mean by buying back shares. We want to own more of the company over time. We
and as you said, Paul, as you said, they've been buying back shares for 20 years now.
Yep. In 1999, they had 6.8 billion shares. Now they have 4 billion. And 5 years ago, they had 4.69 billion. So check mark there. Pillar number 6, we're going to look at the debt. Because just like you personally, a company with more debt is more likely to struggle during recessions and bad times. So what do? We look at the main page for everything money exclusive software. We look at the 5-year average free cash flow, 15.7. We multiply this by 5. That's $78.5 billion. We want their total long-term liabilities under $78.5 billion. So I scroll to the top, I go to the balance sheet in our exclusive software, scroll all the way to the bottom. Total long-term liabilities, 48.3. Check mark there.
Nice.
So they can basically pay off all their long-term liabilities with the last 3 years of their free cash flow. Now, speaking of cash flow, let's go to the cash flow statement and do our last 2 pillars, which are driven by cash flow. The first one is we want to see cash flow growth, or the free cash flow growth of the last 5 years. Free cash flow is cash from operations less your capital expenditures. And the 5 things you can do with them are pay dividends, buy back shares, pay down debt, make acquisitions, and invest back in yourself.
Boom.
So we add this line to the free cash flow statement. This doesn't exist in any other free cash flow statement. We want the math to be easy for you. 5 years ago, they did 11.8 billion in free cash flow. Last year, 17.3. Check mark there. And then our final metric, we want to come up with a market cap to look at for the company. This isn't set in stone as a starting point. We take the 5-year average free cash flow, multiply it by 20. 15.7 times 20 is $314 billion. The current market cap is 204. That's a check mark. That means the current company is currently selling for less than we're willing to pay for it. Let's go look at the 8 pillars tab and see how exciting this is. All 8 check marks, guys. This is an 8-pillar thriller, as Seth would say, right, Seth?
Yes, of course. I love this.
So does this mean it's buy? I don't know. What we need to do next is go to the stock analyzer tool, which has been the most popular part of our exclusive software. What we're doing here is every investment's the present value of all future cash flow. And since we don't know the future, we have to make assumptions about that. And this tool will tell us, based on our assumptions, what we need to pay for the company today. So we're going to do a 10-year analysis because Intel is a big company. It's going to be around for a long time. Uncle Mo, give me some revenue growth numbers.
2, 3, and 4.
Okay, give me some profit margin.
22, 22 and a half, 23.
Free cash flow margin.
Would you say the same for free cash flow or a little bit lower?
That's a good question because the profit margin's been higher than the free cash flow. So I'd probably go lower on the free cash flow margin.
Okay, maybe 19, 19 and a half, 20.
Okay. PE.
12, 14, 16.
And then return, I always do 12.5%, guys, because we can get 9 or 10% just by investing in ETF. So for margin of safety, as well as give yourself a reason to have an individual stock, look for a higher return. We hit the analyze button. Boom. Pretty consistent. We've done different videos of this and put in different numbers all the time, but it always ends up somewhere in this high 40s, low 50s range for our mid assumptions, right? So our goal is to buy, and I look at Intel saying, this is a leading tech business. And some people would argue like, oh no, it's dying. Okay, then it's dying. But the company's dying with increased revenues and they have great chips coming out. There's a chip shortage going. I think very positively about the future of this business because of how cheap it is versus a company like AMD, which we'll be doing next. So I look at this and say, this is awesome. And guys, this is why we created the software. We created all the software because our users wanted to be able to analyze companies without having to wait for us to make a video. This software allows them to do that. The things you get with this software, you get everything on this main page, the 8 pillar, all these tools right here, plus all the stuff coming. You get exclusive daily content. That's 1 to 3 videos a day that made by us just for our users. You get access to Seth Mo and I. You get 30 years of financial data, over 30 years of financial data. But most importantly, you get access to our community. So our community is over 6,000 people who've already bought this software. It's in a very organized chat. You can go in there and talk about everything imaginable, even crypto, even Tesla, all your value investing ideas, even personalized. We have people in there that are friends now. It's an incredible community. Join. All this is available for only $1 per day. There are 2 ways to sign up, everythingmoney.com or Patreon. The benefit of signing up directly with everythingmoney.com is we are not big enough to charge sales tax yet, so you're gonna save on that sales tax for a while. And the other good news about the software is you sign up today, every month the price to new subscribers goes up. So whenever you get your price, that is your price locked in forever. So this month it's $1 a day. Next month it's going to be higher. Last month it was lower. So when you sign up, we have people who are paying like 25 cents a day right now because they signed up so early. So sign up now, $1 per day, less than a cup of coffee, gets you access to all of this. If you can change your returns by 1 or 2% to the positive or decrease your losses by 1 or 2%, this will yield hundreds of thousands, if not millions of dollars, $1 per day. Sign up now.
If you want to trade Intel at a quicker pace, you can join Mo in that wonderful BitNAS Nation, our top trading tier. He will guide you and provide you with the rules you need to trade. Mo, come on in and show me what you got with Intel, baby.
So guys, with Intel, this is one of those stocks where let's zoom out a little bit and just show you guys. This thing gaps all over the place. If we're looking at the left side of the screen, gap here, gap here. Every earnings it gaps around. So recently, we just had a big drop on earnings, and this is when Mobileye was acquired, or they were going to split, or whatever the news was, and this thing shot up. It was up like 10% in a day or something. And I said, guys, with flagpole patterns like this, where you have, let me pull up a line chart for you and show you. Oops. When you have a stock that just skyrockets up, creates this flagpole, what I call it, it comes right back down. So I did say when this thing flies up like this, and I want you guys to take note of this because it happens all the time. It happened over here. No W's were created. What we want instead of these flagpoles are the stock price to go up and pull back a little bit, and go up and pull back. And these pullbacks that are created, these are your support levels. So when the stock price pulls back, it bounces off that support level and goes to the next area, instead of just shooting up and coming right back down because there's no support built in. So number one rule to take away from Intel right now is when you get flagpole patterns like this, which happen frequently, please take profits on them, and that's exactly what we did. Right now, looking at the stochastic, you're in a sideways trend. Nothing is really happening. It's in its consolidation channel with the exception of that blip last week or 2 weeks ago. And that's where we are. If you want to do something with Intel, I would say bring it over here on a daily chart. This is a day-to-day chart with a daily stochastic. You're kind of moving into the sweet spot here. When your yellow line gets into the sweet spot, see if you can make a run to the 100-day moving average, take profits, and it'll probably fall back down. Another interesting way that you could trade Intel is come over here on a 15-minute chart. Each one of these candles is a 15-minute period. We are opening up the previous day. So what we're doing is, as soon as you're over this 80% area, this is your percent K, you can add with good volume coming in, engulfing candlesticks coming on, and make that move to the top, and you can make a good amount of money in a very little bit of time. So if you're interested in learning these rules about long-term trading, swing trading, day trading, flagpole patterns, come and join me in the BitNAS Nation. You'll get my Trading 101 series, which is all of the rules that you need to be successful. The Employed Trader series, which is 6 stocks that I go through on a daily basis and update you. My Saturday monthly seminars, one Saturday per month. I spend the time with you guys answering Q&A, teaching, anything like that. It's for the BitNAS only, and a Discord community of 950 plus people that all want to trade just like you. It's a great community to learn from. Come and join us.
Guys, a question.
Go ahead, Paul.
I wake up every morning with the tent pole pattern. What's that all about?
Does it come down?
You need to consult your position, Paul. You need to consult
it all works. After I climb the tent pole, it comes down.
Paul, you have not mentioned often the Mobileye acquisition for Intel. I mean, what do you think? I mean, the more I look into this, they're going to take Mobileye public next year. They're growing. They're expecting tons of revenue. I mean, how will this affect Intel?
It's very small revenue right now, but Mobileye is the leader in car autonomous driving technology, I guess. So, I mean, it's awesome. I mean, that's great. But me, guys, I'm more of a let's see how the past and present looks. And as long as I believe it's cheap enough where in the future, I believe Intel is going to be around for 10 years. And even if they're not the leader in 10 years, the pie is going to be so much bigger as the world gets more and more developed and becomes more reliant on technology, then I'm okay with that. But I'm like, okay, it's okay. It's just, I look at Intel like the US. We're not going to be the fastest growing country ever again, but we're still the US. And if the pie gets bigger and bigger, our share of that pie will decrease, but our piece of the pie will still be growing. That's the way I look at Intel.
That's a take, folks. Follow the thumbs up, join the community. You will love the software. We'll see you next video.
$120 PayPal payment, $100 PayPal payment, another $100 PayPal payment, and an $80 PayPal payment. And this is not crazy rocket science. Literally, you can earn $500 per day just watching YouTube videos. The secret, literally all you need to know to make this work and make PayPal money literally as soon as today is... What's up, guys, and welcome back to another exciting video. If you're new here, first of all, welcome to the strongest channel on YouTube. Make sure you do two quick things. Tap on that subscribe button and hit those notification bells. Why? So that you can be our next big winner. We pick the first commenter on every video, and we give away cash, thousands and thousands of dollars worth of prizes, courses, and so much more. But you're only going to be the first commenter if you subscribe. Turn on those bells and comment on every video. And do me one quick additional favor. Tap the like button until it turns blue for the YouTube algorithm. It does help us show these videos to more beautiful people like you. So today's video is about how to make $500 literally as soon as today or the next week just watching YouTube videos. And I know that might sound hard to believe, but if you stick with me for the next 10 minutes or so, I am going to not only prove it to you, but I'm going to show you multiple different ways to actually expand this and start making even more money. You don't need a website. You don't need a credit card. You can do this from anywhere in the world. And this is going to be one of the cooler videos that you've seen on how to make money on the internet. And so without further ado, let's kick it off and jump into my computer. But really quick, one last thing, comment down below on this video, make money online. And if we get 1,000 comments that say make money online, we're going to release a part 2, even crazier version of this video the next time we actually put out a video, but only if we get 1,000 comments down below that say make money online. And so let's jump into my computer, guys, and I'm going to show you exactly how this works step by step. Let's go. All right, guys, welcome to my screen. So if you're new to YouTube, like basically no one on earth, like where have you been this whole time? But if you're new to YouTube, one of the most popular categories, if not the most popular category, is video games, right? Gaming. People love it. People consume more actual footage of people playing video games on YouTube than pretty much any other actual category on the website. And as you know, YouTube is one of the top 2 most visited websites in the entire world, right? So if you think, TikTok or some of these other websites are taking over, it's true, but YouTube is still far and away the leader when it comes to video consumption. So what we're going to do is we're going to do something brand new. So if you actually go into Google and you type most popular video games, you can see that there's a bunch of different things here, right? A lot of them make a lot of sense. Fortnite, Grand Theft Auto, Minecraft. And so if we actually look and just think about it for a second, right? Minecraft is an incredibly popular game. It has an unbelievable community. It sold for billions and billions of dollars to Microsoft. When they sold to Microsoft, obviously they're upgrading their infrastructure, and they get access to all of Microsoft's actual systems and processes, and tens of thousands, hundreds of thousands of employees. So we can choose Minecraft, but I want to show you guys exactly how this works, right? So if we go to a free tool called Google Keyword Planner, we can actually see how many times people type things into Google and into YouTube. And this is going to be important in a second, right? So make sure you stay tuned for the next 5 minutes, because again, if you can't watch a 5-minute video on how to make money online, then you're probably never going to make money online. Simple as that. So what we're going to do is we're going to actually come in here and we're going to type in a few things, right? We're going to type in Fortnite. We're going to press get results. And what we can see is Google is going to tell us that Fortnite actually gets searched 4 million times per month, right? The average monthly searches. And then we're going to come in here and we're going to type in Minecraft, get results. And we can see that Minecraft is searched 3.35 million times per month, right? So unbelievably high search volume, tens of millions of searches every single month. And so What we're gonna do now is we're going to use Fortnite and Minecraft as an example, and I'm gonna show you guys exactly how you can make money doing this. Because let's face it, one of the biggest problems of making money on the internet is it's hard building a website, right? A lot of us don't have credit cards that we can use to actually do this type of stuff, but most of us do have time that we can actually invest into creating passive sources of income, right? And then once you start making, a couple bucks, a few $100, maybe a few thousand, you can then invest that into yourself, into digital courses, into learning about digital marketing or e-commerce or more scalable actual methods to start generating income. But what we're going to be talking about today is something called a paid URL shortener, right? And how this works is you can take any link on the internet and you can shorten that link, right? Similar to Bitly, but there's one very important difference, right? What happens is when people click that link, instead of going directly to the destination, they go to what's called a bridge page, right? A bridge page shows them a quick ad, and then they actually go to their final destination. When people actually click on the links that you generate, watch those ads, and then go to their final destination, you get paid for every time that person actually clicks on your link, right? And it's as simple as that. And you can see that there's like a bunch of different competitors who do this because there's a lot of people making a lot of money. And you can see right here, they have 40 different actual versions. There's Linkvertise, Shrink Earn, Shrink Me, right? And what we can see right here is you can get $220 per 10,000 clicks on the actual link, right? And 10,000 might sound like a lot, right? But if you actually do this in the right way, if you have one, sort of video or forum or whatever actually start to go viral, or you're doing this a lot, or you scale it with, virtual assistants or many different ways to do this, it actually can be a little bit easier than you might think. And also, every time you refer friends, you receive 20% of their earnings for life. And so what we're going to do is we're going to go to shrinkme.io. And you can see right here that shorten URLs and earn money. Right, so all we have to do is find a URL to put here, which we're going to show you how to do in a second, right? So if we come in here and we type in Fortnite, what we can see is there's 17 hours ago, this has 721,000 views, 844,000 views in less than a day, right? So there's people just watching unbelievable amounts of Fortnite every single day. And so what we're looking for is, something that's a little bit more viral, right? 1.2 million views. We're looking for something that has close to 1 million views in a day. And this one has over 1 million, right? This one at the top has, close to 1 million. This one has close to 1 million. So what we would want to do is we would want to actually take one of these viral videos, right? One of these videos that already has a huge amount of interest, right? Cypher PK is probably very famous in the actual Fortnite space. And so we would take the actual link for this video right here, and we would put it into Shrink Me, right? And what this is going to do is these are videos people are already watching. These are videos that people are already interested in. These are videos that people are already clicking on, right? And so somebody else is working very hard to create this interesting, compelling content that people who are interested in Fortnite are actually going to consume and watch anyways. And so why not actually push more people to these talented creators' videos so that they benefit, but you also benefit by having compelling content you don't need to make, you don't need to record, you don't need to go out and make videos, you don't need a website, you don't need a credit card, you don't need any of that, right? All you have to do literally is just shorten the link of something that already exists, and then every time that already interesting content gets clicked and watched, you get paid. And so what we're going to do, you can see that I already have $1 here in the available balance, which is kind of fun. We're going to go to all links. So what we're going to do is we are going to actually sign into my account here, go to the dashboard. You can see I already have $1 here, which is kind of cool. We're going to go to new shortened link, right? And what we're going to do is we're going to take that YouTube video that has close to 1 million views already in just the last 17 hours or whatever, and we're going to press shorten, right? And now what's going to happen is it's going to give us this link right here. Once we click the link, it actually shows some ads, right? And then when people actually click the link and view those ads, you get paid, and then they can just click the button to actually proceed to the next page, right? And so how are we actually going to get people to click on our links, right? So that's a good question. So let's talk about that in a second. But if you are enjoying this video, make sure you comment down below, Make Money Online. You get 1,000 comments, we'll release a brand new video that might even be crazier than this method. And make sure you like this video and tap on subscribe and turn on the bells. Only if you're enjoying it, right? You don't have to if you don't want to, but I'm working hard for you guys to bring out these videos every single week. So what we're going to do is we're going to go to where the people are, right? right? So this is just Fortnite, but if we actually type in Minecraft, right, we can see a bunch of views as well. Almost 800,000 views in 20 hours, right? 7,000 people are watching it live. We have a bunch of different videos here where, 30 million views a month ago, which is absolutely insane, right? PewDiePie and some of the biggest YouTubers in the world actually make Minecraft videos. You can do this with all sorts of things. Video games are just a good example, right? There's more examples out there, but video games is one of the most viral topics on YouTube, amongst other things, right? So what we're gonna do is we're going to actually go to where the people are, right? So if you Google search Minecraft forums, you can see that they have Minecraft forums right here that were published recently, right? That have, tens of thousands of actual views and comments and things that people are actually interested in. If you come to the forum here, you can see that this has 826,000 posts, which is just absolutely insane, right? The discussion, and people are posting, all the time, 90,000 different threads. There's other very popular video games like Among Us is very popular. You can come to the Among Us little parts right here and post about, hey, here's a great new video that I just saw, launch, check it out, right? And it's already engaging, interesting content. And then another one is, PC Gamer Forums, right? PC Gamer Forums gets 20 million unique page views per month, right? Close to 1 million unique page views every single day, right? So there's tens of millions of people out there that are browsing and are looking for interesting content related to the actual things that they're interested in, like Fortnite, like Minecraft, like many other actual video games. So the cool thing is you can shrink these links, right? You can even create content on YouTube and push to them. If you like creating content on Minecraft, you can share them on your social media. There's so many ways to actually do this, but it's cool because you can actually leverage pre-existing content that people have already made and use pre-existing forums that people already browse. You don't have to make your own website. You don't need a credit card. You can do it from anywhere in the world. Now, is this going to make you rich? Probably not. But the point of this is to start making some money when you have absolutely nothing. You can then reinvest into yourself and check out a course on Udemy about digital marketing, or learn what I call high income skills, right? Something that you can actually charge thousands or multiple thousands of dollars for, that you've actually perfected and that you're really good at, and that you can do for the long term. And if you like this video, make sure you check out our other two YouTube channels, our top 25 podcast, the Kevin David Experience, and More Kevin David, where we go live every single week, answering your questions live, teaching you how to make money online. Those are both down in the description. Or if you just want to hang out here and watch more videos like this one on our main channel, then stay where you're at, because we have a brand new playlist coming to you live in 3, 2, 1. Click the playlist in the middle of the screen, guys. See you there. Click it. Come on, click it. Do it. Click the playlist. Okay, you don't have to, but I promise you'll like it. Click the playlist. See you soon. Peace.
Hey, welcome to Everything Money. We're glad you joined us again. We are talking today about 3M, an incredible company we'll get into. We will use our 8 pillars to look at the financials and the numbers of the company and separate it from the stock price. We will show you what you should be paying for this company. If you'd like to trade 3M at a quicker pace with Trader Mo and the Business Nation, we will show you the charts to trade with this. But first, who are we, Paul? I bring your questions, the people at home. I bring your questions to a couple wealthy guys who manage over $100 million in real estate, businesses, and stocks, and they will walk us through their mindset and process of investing in a company like 3M. I introduce you to Paul Gabriel.
Thank you very much, Seth. So this is our exclusive Everything Money software, which you will find out about the end. We click on the 8 pillars. I type in 3M.
This is a 100-year-old company, folks.
Is it really?
Yeah, they have 4 business segments: safety and industry, transportation, electronics, healthcare, and consumer. 50% of their revenue comes from outside the Americas, and I find all this information on our software as well, Paul.
That's right.
Keep going.
60,000 plus products. All right. So it's a $105 billion company market cap. First pillar, we want the 5-year PE less than 22.5. This is taking the current market cap divided by the average earnings of the last 5 years, and it's 20.4. That's a check mark. We then look at the 5-year return on invested capital.
Yeah, we want this above 9, Paul.
We want above 9%. It's 14.4, another check mark. So this is a company that does a very good job of investing the capital within the business. This is a very important aspect, something that a lot of investors like Warren Buffett and Charlie Munger really love. A lot of value investors love this. Now, Sethi, got a dividend over here.
Oh, look at that, twice the market.
Oh, more than twice the market. It's 3.2%. The market's like 1.3% or 1.2%.
But can they afford the dividend, Paul?
So this is very important. Most people just assume the dividend is taken care of. It is not. You have to take the dividend paid on our software here, $3.4 billion, And to make it easy for you, we put it right above, a few lines above. Their 5-year average free cash flow was $5.6 billion, and their last year's free cash flow was $7 billion. So $3.4 billion was easily covered last year and in the previous 5 years. So it looks to me like the dividend is safe. Okay? So pillar number 3, we go to the income statement on our software.
We want revenue growth over the past 5 years for pillar number 3.
So we put up the last 10 years for you, 30.5 to 34.73, check mark. Not a lot of growth. Revenue is only up 10 or 12% over the last 5 years, but this is a large company. That's to be expected. Don't get turned off by that. You should look at it as a good thing. Why? Because everybody else probably looks at it and says, what a boring company. I look at it and say, great. They think it's boring, stock price could very well be down. Pillar number 4, we slide down a little bit in our software.
Profit growth.
We go to the net income line. Profit of 5.39 to 5.95. Check mark there. Barely up, but very consistent over the last 10 years. Look at these consistent numbers, Sethi.
Yep, a little bit of growth, nice and slow, like a Toto.
Slow and steady. Now, pillar number 5 is one of the most important ones, and it's often overlooked by every investor out there who's not a value investor. Share dilution. What we want to do is, do they have more shares outstanding today than they did 5 years ago? Why is that important?
Well, also often, it's funny, Paul, I watch these videos and without talking about share dilution, they talk about where this company's going in the future, what a massive uptick it's going to have in the future. But share dilution can hurt you right now as a shareholder. They're thinning out the pieces of the pie that you own of this company.
Yep. So I call it a silent killer of investments. Why? What the company can do is, if you own 100 shares and they issue tons more shares, you still own 100, but now it's divided by way more shareholders. So let's say the company has 1,000 shares out there, you have 100 of them, you own 10% of the business. If they go to 1,500 shares, you still own 100 shares of 1,500 now, which is 6.6% of the business versus 10%. You've been diluted. You've been killed essentially without even knowing it. Now, their shares outstanding. 5 years ago it was 598. Now it's 581. Check mark there. So it's good. They're buying back shares, okay?
Pillar number 6 is total long-term liabilities divided by 5-year free cash flow. We want this multiple under 5. Can they pay off their debts, Paul?
So it's important to look at companies and look at their debt levels. Obviously, a company with less debt is more likely to survive than a company with more debt. Just like you personally, your neighbor and you have the exact same income, lifestyle, house, but they have $1 million in debt, you have 0. Who's more likely to survive? Okay, so we go back to our trusty software's main page. We go to the 5-year average free cash flow, $5.6 billion. I multiply it by 5. That equals $33 billion. So I want their long-term liabilities to be under $33 billion. So I go to the trusty balance sheet on our software. I scroll all the way to the bottom, $24.3 billion. That's a check mark, because we're okay with 33. It's under 24. That means in under 4 years, they will be able to pay off all their debt, long-term liabilities, if they took all their cash flow to pay down debt. Okay? Because it's a cash flow. Now the cash flow statement here, this is the most important aspect to me. I look at cash flow more than earnings. The reason I do that is because cash flow is harder to manipulate. Earnings are manipulated by SEC rules, accounting rules, things the company can do. Cash flow is just cash in, cash out. Free cash flow is cash from operations less your capital expenditures. Now what I do here is, for our subscribers to our software, they have this line put right underneath here. Other software has it elsewhere in the software. We have it right here. And it tells you exactly the numbers. So 5 years ago was 5.38 billion. Last year was 7.08. That's a check mark. Okay. Now the final metric, the final pillar, we take our average 5-year free cash flow and multiply by 20. Most common question is, why did you multiply by 20? Well,
that's how our viewers sound.
It's not how it sounds. Typically, in a 1-year basis, you want to pay less than 15 times free cash flow for a company. However, we're looking at 5-year average. So if it's increasing, we're willing to pay a higher multiple of free cash flow than if it was just 1 year, one off the chart here. So 5.58 billion times 20 is $112 billion. Roughly 111 point, so whatever, which is a check mark because the company is currently $105 billion.
That's correct, Paul. Yeah.
So, does this mean you should buy the company? Not necessarily. A fast-growing company versus a slow-growing company, you need to be able to pay more for a fast-growing company. So that's why, first off, let's look at the 8 pillars tab. Oh, this is all 8-pillar talk.
Oh.
I didn't realize that.
Check, please.
Guys, our 8-pillar tab just does all the work for you right here. 8-pillar stock. Now, some of you out there might say, does that mean I buy it? Pump the brakes. If it was only that easy, we would do that. But what we did was we created a stock analyzer tool exclusive to our software.
Why have you not brought up the stock price, Paul?
Stock price can be manipulated by so many things, by number of shares. That's it. Look at Berkshire Hathaway. Their stock price is $450,000. Does that mean they're more expensive than Amazon because Amazon's at $3,000? No, actually, Amazon's more expensive than Berkshire Hathaway. For those of you who don't understand that, go watch more videos because it's about how many shares outstanding there are. It's about the company itself, the total revenue, total profit, etc. So that's why I haven't brought it up yet. So I go to the stock analyzer tool. I pick number of years of analysis. I pick 7. Actually, for a company like 3M, it's been around a long time. It's probably been around for a long time. I'll pick 10 years of analysis. So I'm very long-term oriented. I'm going to pick 2 assumptions. So it's going to go low and high. Now, here's what the software does. It gives you the 1, 5, and 10-year numbers, asks you to make assumptions. Makes it very easy for you. So first one, revenue growth. Even though they had a big jump last year, over time, they don't tend to do well. So I'm going to go 1% and 3%, low and high. Share change. They tend to buy back shares. So I'm going to say minus 1% and minus 2%. Profit margin, pretty consistent, 15 and 17. Free cash flow margin, 16 and 18. PE. Now guys, PE and free cash flow multiple. The bigger the company, the slower the growth, the less the PE you should pay. This is a very, very large company. I'm going to go 13 and 15 for both of these because it's a boring company. Now for my desired return, I always put in 12.5%. Why do I put in 12.5%? Because the market's going to do 10% if I just buy an ETF over long periods of time. So for me to go pick individual stocks, I want a reason to. So I want to get a higher return.
What we're trying to show you at home is just a 1 or 2% difference in your total portfolio over the next 40 years can be drastically change the amount of money you have when you retire. Millions of dollars of difference, right, Paul?
Absolutely. So I put all this information in, I hit analyze, and guys, guess what? It's overpriced.
Still.
So here's an 8-pillar stock that's overpriced. Why? Because the growth isn't there. Now some people will say to me, well, Paul, the dividend, you can't add the dividend to this return because I'd be double counting free cash flow. It's a little bit more complicated to explain it, but I'm doing a present value of all free cash flow. So if I add a dividend on top of it, I'm double counting the cash flow coming in and a dividend out. So I'm looking at this saying, where do I feel the stock is? It's probably 130 or so. I'm gonna throw a gut reaction to it. So when was the last time the stock was 130?
You know, it's funny, 3 years ago it was $250, Paul. So
wow.
130 was like, COVID crash, got down to 130, 124.
Okay, 117, COVID crash. But look at this saying, guys, this is a company I am definitely going to be watching for a long time. And as the stock falls or the fundamentals get better, I'm going to keep watching it and try to buy shares.
This is a prime example of maybe disregarding what your friends are talking about, the Bitcoins and Teslas of the world, and looking at companies that have shown strong financials for a decade and then finding them at a very low price. And you can do all of this in the app, our Everything Money app. Paul will show you how to get it right now and what it does.
So guys, the software was created because our users said, how do I do analysis without waiting for your videos to come out? Perfect idea, so we created the software. What do you get with it? You get all of this on a desktop or a mobile app. All of this is also on your phone. You get a community of over 6,000 people you can chat with every single day, 24 hours a day, all across the world about all your investment ideas. You get exclusive daily content from Mo, Seth, and I. 2 videos a day where we just talk about other random things that's only exclusive to our software subscribers. You get real estate calculator and other software we're going to add to it. We are not done with the software. We are adding so much more to the software as time goes on. You get news, you get everything you've seen. It's a no-brainer, and it's only 90 cents per day. If you are serious about your financial future, 90 cents per day could literally lead you to hundreds of thousands, if not millions, in extra gains just by increasing your returns by 1 or 2% a year. It's a no-brainer. Join the other 6,000 people who've done it. They've loved it. It's been great.
If you want to trade 3M at a quicker pace, you can join Trader Mo, and the BitNast Nation, that elite trading tier of our subscribers. And Mo, what are people? Oh, look at that! Look at that over there! Look at this.
Yeah, this one's interesting. So I actually just sent out. I added this to my watch list in the Discord because. So what we're seeing right now, I like where this stochastic is going. There's no doubt. But I'm going back to 2019. There's a resistance point here, here. With the exception of this little blip, we're right back at that resistance point. And if I pull up the other chart, which I'm going to do real quick, you're going to see that we're having a very difficult time getting through 4 of these major moving averages. These lines are, the blue one is 100, 200, 50, and 25-day moving average. So what's it going to need to get through those? It's going to need volume. That's absolutely true. So, but right now, let's zoom in here, see what we can do with it today. It's absolutely on my watch list. I'm waiting for this thing to move into the sweet spot, get some volume, and start making this climb. And all I want to do is get up to just over $200 a share. That's really, I don't necessarily think that it's going to break out to all-time highs and go crazy, but I do think that there is definitely some room to run here over the next couple of weeks. Just got to be patient with it. So if this interests you, this kind of pattern recognition interests you, join the Bid and Ask Nation, get all my training series videos, learn from me, and you will do very well if you follow the rules.
So remember, go to the link below at everythingmoney.com or join Patreon. You can sign up very quickly. Everythingmoney.com, the benefit is you don't get double charged in the first month and you don't pay sales tax yet because we aren't required to do it quite yet. One thing though, look at what Mo just did. Had nothing to do with the fundamentals of the company.
Zero.
So if these fundamentals don't jive with you, but you like the charts, it's a great way to invest in anything just based on the price movement, all that stuff.
In the end, you can watch more of our videos and learn from us. We are here for you. You can get rid of that financial planner who's charging you fees. You can use our software to gain control of your investments for the next decades to come. We appreciate your support. Fondle the thumbs up and watch more of our videos. They're coming up right now. We'll see you in the next one.
Three crypto altcoins that have the potential to 10 to 20x literally by the end of January. I'm talking about degenerate gains so offensive that even your own children would recoil in disgust every time you open up your Binance app. I'm talking your personal butler hand feeding you caviar on your yacht in Monaco gains. I'm talking Richie Rich McDonald's at the house for breakfast gains. I'm talking Scrooge McDuck diving off of a diving board into a pit of gold gains. I'm talking about gains that can make you so woke that Kyrie Irving would look like he's asleep. I'm talking about gains so profound that every time somebody mentions a Roth IRA, you physically slap them in the face and say you only exclusively invest into JPEG. And as always on this channel, we are either 100% accurate and correct in all of our predictions, or we were joking. So it's a win-win either way. And so if this sounds like you are gonna enjoy this video where we're gonna be talking about 3 altcoins that have 10 to 20x gain potential literally by the end of January. We're gonna be going into the pros and cons of each, and we're continuing our series where we actually went out and spent hundreds of hours watching every video of every different popular crypto influencer and looking at every single altcoin recommendation from all of them to save you the work of doing it yourself and presenting it all into one succinct, beautiful series where we go into technical charts, we go into the pros and cons and use cases of each coins, and then we're going to reveal for the very first time ever 3 different altcoin picks that we are in very early that we think have the potential to 100x over the next year. So without further ado, let's jump into my computer and we're going to talk about 3 crypto altcoins that have 10 to 20x potential literally by the end of January. Let's go. What is up, my fellow hodlers and hodlettes? In this video, we're continuing our series looking at every altcoin recommended by every popular crypto influencer, and then we're going to be talking about our own picks at the end of the series. But for today, we are continuing on with that series to save you the hundreds of hours that it would take you to watch literally 9 million different videos that basically all mention the exact same altcoins anyways. So this one series will literally save you all the time you would otherwise need to watch 8,743 different videos. So we are on coinmarketcap.com. Obviously, you've probably heard of this unless you've been living under a rock. You can see the market cap of crypto as a whole, $87 billion, low key in the last 24 hours. But we're going to be talking about a lot of different ways to use CoinMarketCap to do research like the pros, right? A lot of people don't know that you can actually customize your columns. You can add, different 7-day, 30-day, charts rather than just only including the 7-day like normal. You can actually come in here and you can even go into categories, and you can actually change up the categories if you want to, view specific types of cryptocurrency. For example, let's say that you wanted to only look at NFTs or things in the metaverse or, specific chains, for example. You can do all of this and more inside of CoinMarketCap. Obviously, one of the things that a lot of people like is both the trending and biggest gainers. Something to pay attention to here when you actually are looking at these is actually looking at the volume and liquidity of these particular projects. Because the problem is you don't want to come and just YOLO all of your net savings into baby Floki billionaire and then only to figure out the rug gets pulled and there's no volume or liquidity and you're actually stuck holding something that's otherwise basically essentially worthless, right? And so what we're going to be talking about today is continuing in our series talking about the top altcoins and cryptos that are being mentioned by some of the bigger influencers. Many of these coins are mentioned 100 different times by 100 different people. So again, saving you all the time of having to do this yourself. So the first one that we're going to be talking about today is a handy dandy little coin called Chainlink, right? And the funny thing about Chainlink is I've actually used Chainlink without even realizing it, doing some stuff with cold storage wallets and things like that. You can see that it's having a pretty good day today, right? Up 5%. Look at the actual 1-day chart. We can see some positive movement here. The 7-day chart looks a little bit more sporadic, but if you can see right here, right, there's kind of a general little band that we see already on the 7-day moving average, right? But if we actually take it out a little bit farther into the 1 month, we can actually see some pretty strong data here that shows that this price band generally hangs out at about the $17.50 mark, and we haven't seen much movement going below that. Even during the kind of correction here, you can see that at one point Chain was all the way up to $38, and then like most altcoins and coins in general, over the past 20 days or so, from middle of December until now, we've seen about a 30 to 40% correction, which is good. It's healthy, right? If you're a hodler, probably you don't feel that great about it, but it does give you an option to actually buy into this asset if you believe in long-term potential and it meets your other investing criteria, right? I have 3 very simple investing criteria. The first investing criteria is, would you feel comfortable holding it for 5 years? If it's a yes, that's great. The second one is, does it have asymmetric investing potential? That means that when you put $1 in, you can make $100 out, right? There's a lot of great investments like real estate and many other things, but real estate is not an example of an asymmetric investment. Shiba Inu is an example where you can put $1,000 in and get $500 million out, right? And like we always say, listen to Uncle Warren and be greedy when others are fearful and be fearful when others are greedy. I myself, of course, think that the crypto market is going to have a very, very beautiful start to 2022 into January and beyond. Obviously, if that doesn't happen, I was just joking. But when it does happen, what we're going to see is a lot of people making a lot of money, especially the ones who are smart about, looking at resistance levels and dollar cost averaging into their favorite coins at those levels. Meaning that, 1 week I might put $1,000 in if it drops down to, the $17.50 range. And then the next week I would put same $1,000 in, the same time, the same date, hopefully at that same price. You can set limits to do this so you don't actually have to, troll around your computer all day. But Chainlink does have a lot of really interesting actual use cases, right? You can see that, one of the cool parts about CoinMarketCap is they actually collect and aggregate a lot of really, solid data about who the founders are, right? What they've done in the past. Generally, one of the criteria that big venture capital companies actually look at when they choose whether or not to invest into a company is actually investing into the person, right? And if somebody has already created successful companies in the past, especially in cryptocurrency, that's something that really, really means a lot to, venture capitals and private equity companies, because if somebody's done something successfully once, it's obviously much more likely that they're going to be able to do it, again. So another thing that I like looking at when I'm actually doing research, obviously, what is Chainlink is great, the founders, but things about, what actually makes Chainlink unique, right? And more specifically, the use cases. The 2 most important things when it comes to altcoins, and whether or not they actually have the potential to pop, in my opinion, are number 1, right? Has it actually popped before? Generally, and if you look across Dogecoin, if you look at Shiba Inu, if you look at many of the other, really successful alts in the past,
they had an initial pop and then kind of a drawback as people take profit, on the downswing, and then they have kind of a slow roll and then a master pop, right? And so if we look at Chainlink over the past, year to date, for example, we can see that, obviously they had a big pop here. You can see back in January, right, it was only $11 or so, and then it 5x'd, right? And then it dropped all the way back down a few months later, but it has the potential to reach that point again, right? And we can see that, the ebb and flow of the coin, I like to see the resistance bands generally at about this 24 level, this 14 level right here. You can see it happen once here, it happened a second time here, and we're actually near it again, right? So again, Chainlink, what I would actually do, from my perspective, is I would look to see if it ever is going to reach this point again, because it's pretty near here actually as well, right? It's only a couple of dollars off. And if so, right, we can see that literally over the past year, that has been the resistance band that has not been broken, it's actually been tested a couple of different times, right? And so that's what I would, focus on for Chainlink. Obviously, Chainlink is something that, has a lot of potential. Obviously, it's used a lot. The other thing that I was talking about is one of the things that I really look for is the amount of transactions actually processed on the actual coin or token, and then the developer adoption, right? Because obviously the more developers, the more companies, the more engineers who are actually utilizing and building and growing a coin's particular ecosystem means that that coin has more use cases. People are actually using it in the real world. And the only types of investments that I like to make are companies that I would actually feel comfortable holding for 5 years. So obviously, the use cases, the user adoption via the number of transactions per second, and then also, of course, the developer adoption are three of the most important things that I'm actually looking for. The next altcoin that I've seen mentioned a lot of different places is actually called CryoWar, right? Now, CryoWar is very different compared to, most of the coins that we've been talking about previously. Obviously, you can see the market cap and the fully diluted market cap are very different here, which means that there's a lot of, coins and things like that are probably locked up founders or employees or, whatever, the actual use cases is of that. You can see right here that over the past 7 days in the month, we've seen a fairly negative overall downtrend. We don't see a lot of, pops or anything like that. So this would be one of the examples of a coin that I probably would not invest in myself, just because it doesn't meet my investing criteria when it comes to, catching a falling knife. Now, does this mean that it's not possible that this coin, pops and goes absolutely crazy in 2022? Absolutely not, right? But if it does, then of course I was joking about not buying it, and obviously you'd be smarter than me, going ahead and actually doing that, right? So what we can see here is a lot of different information about where it's listed, how to actually buy it, CryoWar news when it comes to all the different things that are involved in that. It is a play to earn. It has a lot of interesting stuff. The best way that I like to learn about these sorts of things, if you've never heard about them before, is simply by going to their website, right? Next gen blockchain multiplayer game. Obviously, they've done a really good job here with their website, which I like to read about, right? As far as the about us, I like to read about, who's behind the project, what they've done in the past, right? It really does take a significant amount of time and effort to actually, review these sorts of things. Another thing that I like to look at that I've talked about before is the community, right? I like to see how big and how active their community is. Generally, Telegram and Discord will be the largest. YouTube usually is pretty small. And you can see that they have 22,000 members with 5,000 online, right? Which is actually a pretty good ratio, as I've seen generally. It's about a 10% active ratio. So for example, if you have 100,000 members, 10,000 generally would be active. So you can see right here that 5,000 out of 22 is actually closer to 25% active, which means that they have a very active user base, albeit still a semi-small one, but they do have a larger Telegram channel. So those are good positive signals that I like to look for when I'm thinking about potentially investing into a smaller market cap project such as CryoWar. The other thing that I like to look for is I like to actually see how many people are actually typing this in on Google Trends, right? Google Trends is absolutely your friend when it comes to all sorts of crypto activity, right? If you actually had been using Google Trends like we were when we made investing decisions into Dogecoin, when we first noticed that Elon Musk tweeted about it, and when we made decisions to actually invest into Shiba Inu, again based on retail buyer psychology, more so than actually any sort of actual investing criteria or fundamentals, as fundamentals of course don't exist in crypto. You can see that CryoWar did have pretty significant overall run